Hello, this is Right Side Trader. Today is October 28th, 2025, and this is a quick, summary of this SPX trade. I'm gonna kind of focus. This is not a trade recommendation. If you're interested in trading, please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. This is just a review of this SPX trade that I was doing. I'm finally getting to. I was trying to figure out how I was going to summarize things or what I was going to do for a summary. And I just decided just to do a quick look. The big thing with this trade is all about the VIX and theta decay. That means since we're trading zero-day options, we kind of expect those options to expire. Those options will expire by the end of the day, and we are kind of expecting to be able to make some money based on the VIX movement and theta decay, theta actually dropping, and the prices of these options actually dropping. We are selling an Iron Condor at a 0.2 delta where we think it's safe. Nothing is really safe in this market, you find out, but that's what it was all about. All right, but what I'm looking at here on the charts here is just that a time period where the VIX was kind of high. And let me just go ahead and analyze this, where the VIX was kind of high and the market was going down, and again over here where the VIX was kind of low and going lower and the market was going up. The thing is, the only thing here that I really want to kind of highlight is that you get big candles in the market in both cases. So again, these trades can still go horribly bad on you if you hold them to the end of the day. And that's what my quick little presentation is going to kind of like highlight. So I'll go ahead and throw that on up out there. My summary for the SPX trade 2025, the VIX and all. And when the VIX was low, one of the things that you will notice is that you're going to get a low credit. $3 credit was the max. And I just took a snapshot of a week when the VIX was low. It's going to be $3. Usually you're getting $3 or less if you're around a 0.2 delta. And all. The other thing is that when the VIX is low, the market is usually moving to the upside, as you saw on the chart there. And if you don't get that 25% like right away, sometimes it's better to just go ahead and take a small loss at times if you're trying to wait. That my exit time for these trades was around, I wanted to get around 11 o'clock. One of the things that I noticed in the virtual account, you was getting a lot of exits around 9:40 and 10 o'clock. Options goes crazy around those times, and that's why that happens and stuff. But as you can see, when the VIX was low, holding these things to the end of the day, again, you end up having I call it the mother of all losses if you held these things to the end of the day. There was a few days where when the VIX was low, and holding it to the end of the day was an okay thing and all. But as you can see, a couple of maximum losses, and again, that's why people don't like doing these trades when the VIX is low, because again, the maximum loss is much larger when you're collecting a smaller credit. Now let's take a quick look at the high VIX. High VIX, on the other hand, as you can see, you get a larger credit, 350, 450, almost $3, 360, 370, and closing it at that 25%, is going to be good most days. The thing again, what you can see based on this snippet of a week that I did, holding to the end of the day, you got maximum loss more days than you got good days holding to. Because again, the market usually, when VIX is high, the market is usually moving pretty fast and moving pretty big on those days when the market is trending to the downside. And to sum it all up, my thing is, for me, what I've learned, do not hold these things to the end of the day. Close them for whatever percentage that you decide that works for you. I was using the 25% based on data that I had seen out there on the market and people were talking about. I wanted to go ahead and give it a try and see if that would work. Selling at a 0.2 delta or 20 delta, and it seemed like it did. It did work, number one. And I was able to trade in a virtual account and make $1 million. The thing is, the way I had my charts and stuff set up, I was able to see, that yes, this would have worked, even though I was getting some of the crazy fills and stuff. And I was also looking at live data too to see if some of those fills would actually work. And yes, they would have worked. Trading the size that I was trading was a problem, that maybe I would have ended up with partial fills at times. That happens. So that was one of the other things. But the VIX going up or down, you need to take the percentage. Based on that's one of the things I found out I need to take the percentage. Don't try to get more. Don't get greedy with this trade. Take the percentage, whatever you come up with. In defense of these trades, when these trades are going bad, one of the things that I did learn is sometimes if it looks like the market is going to be trending on you, going against you, attacking the strikes that you sold, you're going to need to take a smaller profit. I need to take a smaller profit. The other thing is, if I can't get that smaller profit right away, again, when you're in the live market, sometimes it just doesn't happen. Take the small loss. You should have other trades on and stuff that'll make up any small loss that you may have on this particular trade and be okay. I did try rolling once, and that did work. But again, it's going to tie up capital and all, and you're going to be holding. And again, it's going to tie up capital, and you're going to be holding this for a few days. The way I actually did it, because I wanted to roll it. I wanted to make sure I gave myself enough time. I got enough of credit and all, where I would be able to get out of that trade profitable after rolling it. And all, and that's pretty much it. It was a good thing. It worked out pretty good for me. I did make it to $1 million in less than a year's time. So, and it's a trade that, you know, I realized though, if I'm gonna do it, I have to do it in an account where I can day trade, and that would be a $25,000 or more account at this time for me, and all. So that's one of the things that that's what I've learned here. If I'm gonna do this trade, it's a good trade, and I have to be at a broker. You have to be at a broker where you can trade 0-day options. A couple of brokers that I am with, well, I don't have margin accounts or individual accounts at those brokers, you know, and I cannot do this trade in those accounts, and I would not want to do those trades in those accounts anyway. But that's it. That's pretty much it. So I'm thinking about, you know, and seeing what I'm gonna do with this trade. But that's it. I hope this has been helpful. That's pretty much it, you know, and that's all I really want to share at this time. This is Right Side Trader. Hope you guys have a good one. Talk to you later. Bye.